The U.S. dollar is higher after President Trump enacted a 35% tariff on Canadian goods, the U.S.'s closest neighbor. That is not too neighborly, but we expect another letter going out to the EU today. The major currency pairs, the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar are higher. I'll go through the technicals that are driving those three major currency pairs in this video, so let's get started. Stocks are lower, yields are higher, the dollar is higher. Taking a look at the euro versus U.S. dollar. We did move to the downside off of the tariff news. This is a 1 hour chart, but we did hold once again this 1.1663 to 1.1693 level on the downside, finding support right near the lows from yesterday, right near the lows of that 63 to 91 area. And in risk of being redundant, that level goes back to the daily chart. Outlined it as a low price through here. We fell below that floor. Again, this is a daily chart. Fell below that floor here, came back up to it here and here, only to find willing sellers, and that pushed the price to the downside. So we returned back to that area and broke above it in trading end of last month and into this month, and up until continue until today. We have been able to find support buyers. You can see that off the hourly chart right here, where the support buyers came in against the low of that swing area at the 63 level, not only yesterday, but also today, and we're pushing back to the upside. So the euro versus U.S. dollar is not that far to the downside. We'll see how it reacts to the tariff letter that President Trump is going to be enacting today. Will it be able to get back above the 100-hour moving average for whatever reason at 1.17145? Or will the inflation risk to the U.S. push the euro back to the downside and break below the 1.1663 level? That is to come. So let's take a look, keep those levels in mind. Let's take a look at the dollar versus yen next. And if we look at that currency pair from the 4 hour chart, you can see that this week we've seen up to the 38.2% retracement level. That's of the move down from going all the way back to this point right here, which is in the high for the year to the low for the year. 38.2% retracement comes in at 147.13, and we move right up toward that level. I think we reached 17 yesterday and rotated to the downside. In trading today, we've seen another rebound to the upside here. Again, this is a 4 hour chart, and that high price came right back up to that 147.35 level or 13 level. And we are once again finding a little bit of a resistance against that level. The current price is trading at 147.02, just off of that level. Break above the 13 level, break above the high of this swing area at 33, and it opens the door for a retest of the high price that we saw not last week, but the week before at 148.01, right around the 148 level. And more importantly, it gets the price above the 38.2% retracement, which is a minimum retracement that you want to see on any corrective move to the downside. Admittedly, we did move above that 38.2% retracement right here. We moved above it right here, but each of those moves to the upside failed, and you can see the selling that occurred when we moved back below there, and the selling right here as well when we fell below that level. So getting and staying above the 38.2% retracement is important, just as important as breaking above that level, and we'll see if that momentum, if we do get a break, the momentum can continue, or do we find the sellers and we push back down toward this swing area right here between 145.91 and 146.28. Finally, let's take a look at the sterling versus U.S. dollar. This is the hourly chart. And we not only had the tariff news, which sent the pound versus U.S. dollar lower, but then we also had weaker data come out of the U.K. today, which helped to push the pound versus U.S. dollar to the downside. As you can see, we are trading to new lows here, and in the process we're breaking below this swing area right through here, which has a number of different swing lows and swing highs going back in time. You can see the number of times the market came into that level and either found sellers or found buyers, I guess, and so most of the time selling. So with the price breaking below that level, it makes this high of this swing area at 135.14 now close resistance. If the price can remain below that level, the bias remains to the downside. We can look to anticipate levels out like here, maybe even to the low price that we saw at the end of June, a retracement, the full move to the downside. It moved back above the 135.14 level would have traders and looking back toward the 61.8% retracement, which the market came down to in trading. What is that on Tuesday? found support buyers against that level. We came back down to it yesterday, and in trading here today, we came down to it and tried to hold support against it. So this level is also important in addition to this 135.14 level. So there you have it, a look at the three major currency pairs from a technical perspective. My name is Greg McGlosky. Good fortune with your trading. Bye-bye now.